There, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 30th of July, 2022. And it's the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the first week of August. And let's begin with the Euro, but as you can see across all the three majors here, they have been largely consolidating for most of the week, while the pound and the Aussie has attempted to climb up somewhat, but then ended up the week neutral as well. So let's move forward with the Euro first. And it was a key week last week with the FOMC, the Federal Reserve, announcing a 0.75% rate hike, 75 basis points, up to the 2.5% now. So this is the second 0.75 rate hike in a row. And however, the US dollar has started to retrace upon that announcement and the press conference following that, and allowed the majors to recover on the Wednesday. So this is the Euro, climb back up to the 102 after dipping lower the previous day, and then just consolidated for the rest of the week and settling just above the 102. So this is after Fed Chair Powell seemed to have calmed the markets a bit with his press conference stating that they are moving forward with a data-dependent outlook for the next rate hike in September, and which means that if the inflation is starting to taper and cool down slightly, then perhaps they may be able to reduce the rate, or they may continue with a third 75 basis points rate hike, unless inflation rears up higher again. Then they could move up to a significant 1% increase, but at the moment it's likely to be just 75 basis points. So that will move it up to 3.25% for the year, and likely approach their target for the year of 3.75% by the end of the year. So with some kind of predictability, the market seemed to have calmed down, and with that, the US dollar started to retrace after strong bullish moves for the last few weeks. And as such, the stock market took its opportunity to rally, and coinciding with earnings seasons as well. All right, so we'll see when we take a look at the DXY whether that has started to correct itself and retrace lower as well. But let's take a look at the weekly time frame, and it's basically stuck within the previous week's range. So it has not been able to push up higher to the 103 level. So it's still trying to push its way up higher, and it's still sitting below the 50% fib retracement of this swing move down. All right, so if we take a look on the 4-hour time frame, and yeah, we can see where the initial move, this was the push up higher on the Fed announcement after finding support from the 101 area, climb up higher. Then the next day there was a retracement, almost retracing all the way back to where it started from, and then continued higher again. But then with the Friday's US PCE price index, which was slightly higher than expected, it pulled back lower again, but managed to climb back up to where it fell from. So basically stuck for the whole week. It did move up slightly higher towards the end. So it needs to still break out above the week's high to try to test the 50% fib and then the 103 level. Okay, moving back to the daily. And the weekly as well. So it's still fairly neutral. It needs to break above the 50 just to hit the 103, and then there's a key swing low before. It does need to try to test, but after that, there could be significant continuation, bearish continuation move if it's rejected from there. All right. This week there's no major news from the Eurozone, so it's exposed to the non-farm payroll for this first Friday of the month. And let's take a look at the US dollar index, the DXY, to compare. Here's the DXY, US dollar index, and it has been struggling to break above the 107 to even test the resistance at this confluence of 2 fibs. And on Wednesday, after the Federal Reserve announcement, that's where it has started to retrace lower, continue lower, and into the support level at this swing high with the 100 fib here. So that's a key support for last week. It seems that there could be further bearish continuation move into the 105 level. So we'll see if there's further bearish momentum, and this is the weekly time frame. Could very well just dip into the 105 area. Now, if we move this into a fib reversal, and you'll see that it did almost hit the 262 fib extension there, just slightly above the 109 level, and then dip back into the 100 swing high. So for now, let's leave it, move to a retracement level. Let's move this to a retracement level to see where it has retraced back into the 62 fib, and it also could dip down just below the 105 into the daily 55 or into the 786 fib retracement as well. Let's leave this as the retracement area. I think we can remove this long-term fib for now and focus on this recent swing move up and then a retracement back down. And if we zoom into the 4-hour time frame as well, and on the Wednesday of the Federal Reserve announcement and press conference, that's where it tried to push up higher above the 107 and was rejected and fell all the way back into 106 and attempted to retrace back, but then continued to weaken till the Friday until the PCE price index came out, and it did try to recover, but then also again rejected from there. So it's back into the 62 fib retracement area. Okay. So this coming week, there is the non-farm payroll on the Friday. That's the key one for the week. And that will be the key support. Let's change this into this key support level now. 106, let's remove that for now and move this 107 into a resistance zone here along with the 38 fib. And of course, right above the at the 109, that's the key resistance. Okay. So this coming week, there's a number of other US news as well. So, but main one will be the non-farm payroll to watch out for. Let's move back to the other majors and follow up on their price action. Now let's move on to the cable, and it has found support after breaking through the 120 round figure and did attempt to climb above the 122, but was restricted by the daily 55 EMA and then closed as a doji on the Friday. But for the week, it has managed to follow through on its bullish recovery and was blocked there by the 122 round figure. And this week is also a key one for the British pound with the Bank of England rate decision this Thursday, and where they're expected to also increase rate by 50 basis points to 1.75%. So for the moment, it's taking advantage of the retracement from the US dollar. That was the Wednesday Federal Reserve announcement where it did push up higher as well and then followed through for the rest of the week. It did dip down lower to retest the breakout area. And if we take a look on the 4-hour time frame, after climbing up and hitting a peak, it pulled back lower with on Friday's PCE data, but then managed to recover back again. Now we can also move this to a retracement. It's like the euro, and track the retracement back into 50% here. And the next area of resistance looks like you can see that there's a lot of resistance up here. That's right at the 62 fib retracement. So it could attempt to continue to climb up higher next week, but then into the 123 level before the Bank of England's decision, and it could be a buy the rumor, sell the news move, and then pull back lower after that. So we'll see if that's the case with this major resistance that it needs to break through. And if the US dollar also finds support and bounces, then this could also cause the cable to retrace back lower. And let's take a look on the weekly to see with this change in the fib. And yes, that's the 62 fib area there. So let's change this now to 62 fib as the key resistance. And let's mark this down as support at the 120. Major support, of course, at the 118. Okay. And this breakout for last week, that was the previous swing low here. So it did manage to break out higher from there and then pull back to retest and bounce back up. Okay, let's move on to the Aussie dollar. And similarly, Aussie dollar also did continue higher at the expense of the US dollar from Wednesday. And it did find support at the 62 fib. Let's flip this around. This is actually the 38 fib retracement area. And then climb up into the resistance zone at the 50 fib area. So on the weekly time frame, similar to the cable, it did continue its recovery into the 70 round figure. And that could be a push into the 62 pip retracement area, which seems to may provide some resistance here. And this is going to be support at 69. So that's still going to be a strong support level. Along with the 38 pip retracement. Okay, we'll see if it's able to break through the 62 and hit the 71 round figure. And with this Tuesday, there's also the RBA's turn to announce their rate decision, and they're expected to also increase rate by 50 basis points to 1.85%. And then they have a separate monetary policy statement released on the Friday. And they're also exposed to the non-farm payroll report this Friday from the US. So we'll see how that price action is going to hamper or help the major pairs, depending on the US dollar price action. All right. So do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.